How do you understand inducements in the markets? So, how does inducement work and how you can overcome inducements, which we also know as the institutional trap. So let's take a look at this uptrend. We have price giving us a kind of break of structure, right? So we have the first move, we have an impulse, we have a correction that creates a kind of bullish leg. But in recent, this bullish leg was an inducement for price. Then you see how price create a low, cause a little break of structure, and come back to mitigate this other block. Then before we now have a proper break of structure. So this low, the first pullback that created this low before this likely break of structure is called inducement, and that is where liquidity is residing. We all know that liquidity is residing below old lows and old highs. So what they do, they create a form of a fake move buy, which we call inducement in SMC. Then this other block has not been mitigated before they move price, and later you see how they move price down, mitigate the other block, then this is the real move. So whenever you want to buy, you want to sell, you must watch out for inducements before you take your long position or your bearish position. Example, let's look at the charts on BTC USD. You can see that price is bullish. We have a major break of structure, right? Then look at this. What happened is that they create a kind of inducement before you can see they create a kind of break of structure, then a low break, then later they came back to induce the people, the early buyer that are here. So how they induce them, their price continue moving. So inducement is a way of inducing people to early buy or early sell before the real move. So this is institutional market trap, and you must be aware of it, that whenever you want to take a trade, take caution and look out for inducement before you take your place.